Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. Stock markets rise with the Nifty reclaiming 18,000, hitting the highest level in almost a month. The sensex gains nearly 250 points. The rupee remains on a tight leash against the dollar. Adani Group stocks end mixed in trade. 6 group stocks gain, but 4 stocks hit the lower circuit. Adani Group has now lost 10.6 lakh crore rupees in market capitalization since the Hindenburg report was made public. India's trade deficit falls sharply to below $18 billion in January. Imports at $50 billion, the lowest in 16 months. Exports are also down 6% on an annual basis. Government sources say the centre's aim of an RBI dividend of close to 30,000 crore rupees next fiscal is a conservative one. Sources say the government will stick to its FY23 deficit aim even if disinvestment receipts fall short of the revised estimates of 50,000 crores. Vodafone Idea's losses widened to nearly 8,000 crore rupees in Q3. The average revenue per user improves but remains well below competition. JP Morgan expects the stock to fall 60% from the current levels. It's the largest order in aviation history. Air India will buy 470 aircraft from Boeing and Airbus in deals worth $70 billion. With 31 new aircraft set to arrive end of the year, Air India could soon match rival Indigo's fleet strength. The income tax probe at BBC's Delhi and Mumbai offices over alleged transfer pricing violations continue for day 2. The UK government sources say they are monitoring the situation. The US says that it values press freedom, but not in a position to offer any judgment on the tax action in India. A 42-year-old woman was pulled out alive from the rubble more than 220 hours after a series of earthquakes devastated Turkey and Syria. The death toll crosses 41,000. UN says more than 7 million children have been affected in the region. Elon Musk is aiming to appoint his successor as Twitter CEO by the end of the year. Says he needs to stabilize the company first and ensure that it is financially healthy. Well, let's head straight to the market action. Another good day for the bulls today. The market saw broad-based gains coming in with the Nifty closing at a one-month high. The Nifty rose 86 points, reclaiming 18,000. The sensex gaining 243 points, ending close to 0.5% higher. Reliance was one of the biggest contributors to the Nifty. Mid-caps outperformed while banks mildly underperformed. Prashant is standing by to wrap up all the action for us. Prashant, green across the screen today.
Well, a strong close and a strong follow-through to the break that we saw yesterday, the break high that we saw yesterday on the Nifty. We took out some important levels as well, which I'll get to in just a bit. Banks underperformed, but they also started to come back towards the last 45 minutes or so of trade. Where were their gains? I mean, the bulk of the gains, if you want to look top-down, were in IT services, autos and real estate, which actually performed quite well. Bank Nifty on your screen, as I said, picked up towards the close, but not all the way. Nifty gains coming through in names like Tech Mahindra, Apollo Hospitals, of course. I mean, we had the management with us and the stock spiked after that, was one of the top gainers on the Nifty. Aisha did well. Reliance, I mean, RIL is starting to move for the last 2 days, and that contributed almost 50% to the gains that you saw on the Nifty. It's an index heavyweight. Bajaj Finserv, SBI Life, HDFC Life were some of the others which did well. There were cuts as well in the broader market. Market breadth has been negative for the last many days, and today was no different. Bharat Forge, CG Power, MCX, RHIM, Campus Footwear, Adani Green, Adani Power, E-Clerks, Uflex, TCNS Brands, and there were many others as well. This is the high volume losers list that I'm talking about. Gains coming through in, Borosil Renewables, another one of those companies which was with us on the program earlier on results. The stock ending up sharply. You had Aisha, Torrent Power, Tejas Networks, GIC, RE and New India Assurance, the general insurance, government general insurance players perked up a little bit as well. 2 days running now, the market has done well. We've broken above a rising channel, a small rising channel, which met the Nifty at about 17,960, and we end the day above, those levels very comfortably in a solid way. It's, of course, over to global markets, which are still undecided. We get retail sales, monthly retail sales, which I think are the next big data point out of the US after CPI, which left markets neither here nor there. And, of course, we'll see if there is more wind in the sails for the market to add a couple of hundred points from here. Back to you.
Yes, we will have to wait to see. Prashant, many thanks for joining us. Crude oil prices, meanwhile, continue to remain on a tight leash. Brent crude is hovering around the $85 mark. Oil prices slightly under pressure today after a larger than expected surge in U.S. inventories. Inflation in the U.S. remains stubborn. Investors fear that further rate hikes by the Fed could hurt oil prices further. Let's take stock of the latest developments with the Adani Group stocks. 6 of the 10 group companies ending in the green today. 4 stocks that ended in the red did hit the lower circuit. The group's market cap was eroded by 13,000 crore rupees today, taking the total loss since the Hindenburg report was released to 10.6 lakh crore rupees. In fact, Adani Green's market cap has slipped to less than 1 lakh crore rupees from its peak of 4.6 lakh crore rupees. That was last year. Now, despite the sharp fall seen in the Adani Group stocks, DSP Mutual Fund has raised its stake in 6 of them. The asset management firm has raised its stake in ACC, Ambuja Cements, Adani Ports, Adani Transmission, Adani Green Energy and Adani Total. Meanwhile, a fresh plea has been filed in the Supreme Court, which has sought a probe into the red flags raised by Hindenburg on the Adani Group companies. The Apex Court has agreed to hear the plea. It has listed it for hearing with the earlier petitions filed against the Adani Group and in the Hindenburg matter. Now, India's trade deficit fell sharply to below $18 billion for the month of January. The fall is largely thanks to imports, which are now at their lowest level in 16 months. Lata joins us now to decode the numbers for us. Lata.
Well, that's important that the trade deficit has come in even below 18 billion, $17.7 billion, and that is a good 25% less than what it was just the previous month, December, when we clocked about 23.7 billion in terms of trade deficit. Now, like you said, the deficit is not because our exports have done very well. In fact, exports are lower than what they were in December, lower than even what they were a year ago. Exports have come in at 32.9 billion last month. That is December, they were 34.5 billion, and a year ago they were 35 billion. So it's not a good export story. It's actually the fall in imports. And India imported much less, a good 16% less than they imported even in December. January imports is 50 billion. December was 58 billion. In fact, on that matter, let's analyze the deficit a little more. The trade deficit, like we said, in January was 17.7 billion. This compares to 25.5 billion, which is the average deficit of the last 9 months. April to December, our deficit was clocking 25.5 billion on an average. And again, imports, like I told you, at 50 billion. If you looked at the April-December tally, the monthly average works out to 60.6 billion. So this is a good 10 billion less than the average we clocked in the previous 9 months. The details are not yet put up on the Commerce Ministry website. As soon as that is out, we will know which exactly are the imports whose reduction helped reduce the trade deficit.
Well, thanks very much, Lata. And speaking of the trade data, government sources telling CNBC-TV18 that the trade surplus for services is at its highest level, with exports in the sector growing at 30%. Sources also say that all ministries have been told to identify imports of non-essential goods and present the data accordingly. Another exclusive tonight. Government sources tell us that the centre has pegged RBI's dividend at a conservative 30,000 crore rupees for the next fiscal. The source added that the government is confident of meeting the FY23 fiscal deficit target, even if disinvestment receipts fall short of the revised estimates of 50,000 crores. Well, we will head into a break, but when we return, we speak to Eurasia's Ian Bremer to discuss the key risks and implications for the global economy and geopolitics when we return. Air India has signed deals with Boeing and Airbus to buy 470 aircraft worth $70 billion. This is the largest order in aviation history and Air India's first since 2005. Madiha joins us now to explain how these deals can change the aviation landscape. Madiha.
Well, Air India's order suggests how the Indian aviation landscape is moving for better times. Air passenger traffic is surging despite soaring airfares, so there's a huge travel demand and therefore an opportunity for airlines to expand. Let's talk about where Air India as a group stands currently. Its market share in domestic traffic stands at 26%, while Indigo controls a huge chunk of 54.9%. So clearly, Air India has a huge scope to expand in the domestic market. Now let's see where Air India stands in the overseas travel. There are many routes where Air India has a marginal presence and has huge scope to expand given the rising traffic to these regions. I'm talking about many of the US and European destinations, Middle East, South Asia, Southeast Asia and South African countries. To expand its operations on these routes, Air India will have to compete with Emirates, Etihad, Qatar Airways, Turkish Airlines and Singapore Airlines, among others. These airlines offer long-distance one-stop connectivity to Indian travelers, so a clear opportunity to tap that traffic for Air India to undertake such an expansion. Now, Air India will need more aircraft, and that's where the new order comes into the picture. It has 220 aircraft in its existing fleet. Of the 470 new aircraft order, 31 will arrive by the end of this year, and some 36 leased aircraft will take its fleet to 287 planes in the short term. That's close to Indigo's over 300 aircraft. In the long term, upon completion of deliveries, Air India will have 726 aircraft in its fleet, while Indigo will have around 800 aircraft after it receives around 500 that were ordered earlier. But Air India will still have an edge over Indigo with around 120 wide-body planes. Now, separately, Air India's order has brought business to 3 engine makers, Rolls-Royce, GE Aerospace and CFM International. Pratt & Whitney, which is facing issues with its new engines, has not received a single engine order from Air India. So that's where things currently stand as of now. We continue to watch the aviation space closely for exciting and interesting developments ahead.
Joining us now to discuss all of this and more is Ian Bremmer, President and Founder of the Eurasia Group. Ian, always a pleasure. Many thanks for joining us here on CNBC-TV18. Let me start by talking to you about what's happening between the US and China. Now, you do believe that we shouldn't expect a complete decoupling between the two economies because they are too interlinked at this point in time. We have seen restrictions and reciprocal restrictions kick in. But how do you see this playing out now in the context of balloon wars?
Well, you're right. They are reciprocal, but they're also very targeted. These export controls, the Americans put them on first, and they're talking specifically about dual-use technologies that have both economic and direct military purposes, hence advanced semiconductors, 5G technologies for Huawei that works with the Chinese military, soon probably quantum computing and generative AI. For the Chinese, areas that are strategic sectors that really matter for them, where they have a significant lead, like the processing of critical resources for the transition energy, as well as solar cell production and some areas of biotech. Those are all important, don't get me wrong, but that's very different from a Cold War between the United States and China. Neither government wants to see that happen. They've both been very careful in trying to ensure that they maintain a floor underneath the relationship, this most important geopolitical relationship in the world today. And the balloon wars, I mean, first of all, one balloon in terms of that we know comes from China and a surveillance program. And when the Biden administration found out about the balloon, they still had every intention of proceeding with Secretary of State Blinken's trip to Beijing to meet with Xi Jinping. That's because it didn't represent a direct intelligence threat. And of course, that meant they weren't going to shoot it down. Now, once it became known publicly, then there was a lot of domestic political pressure that required them to shut down the meeting and to shoot down the balloon. But you're still seeing an urgent desire to ensure that these political leaders are meeting and hopefully meeting regularly going forward. So there's a lot of conflict management going on, crisis management between the Americans and the Chinese, the sort of thing that you don't see at all between the West and Russia, for example.
You know, Ian, I just want to take that point forward, and it's important that you talk about this crisis management and in the context of not believing, or you not believing, that we are likely to see a US-China Cold War. But there are domestic compulsions, and you pointed that out in the context of the balloon being shot down. We are headed into a presidential election. What could that mean in terms of further action from the US against China to cater to the domestic compulsions?
Look, we saw this last year when former Speaker of the House Nancy Pelosi went to Taiwan privately, President Biden was sending his cabinet members to try to tell her not to go, that he'd prefer not to. Once it got leaked to the press that she was planning a trip, suddenly he had to get behind the trip. And of course, that led to some economic sanctions from the Chinese, as well as a lot of military posturing, shooting missiles across the island, all of that. Speaker Kevin McCarthy is likely to make a trip in coming months. I suspect this is also going to be a hard one to manage. So, you know, I have a fair amount of confidence that both presidents want the relationship to be stable. But I also recognize that domestic pressures are making accidents more likely over time. And there's no question that the likelihood of those accidents as we go forward, not just in a presidential election cycle, but just more generally as the Chinese economy becomes larger, as they're seen as more of a competitive threat to the United States, the potential for those accidents is going to grow.
You know, I want to focus a little bit on China specifically, Ian. And while we have seen through the course of the pandemic a reshaping of global supply chains, and I know that you believe that we're nowhere close to the end of globalization, what we are perhaps seeing at this point in time is a reshaping of global trade and investment. But now with China reopening, perhaps also recalibrating its strategy to try and prop up its economy, how do you see the world negotiate now with a reopened China?
Well, look, the world private sector wants to see just-in-time supply chains because they're more efficient, they're cheaper. And of course, the shareholders appreciate that. CNBC viewers appreciate that. It redounds to their bottom lines, to the profitability of the shareholders. I understand that. And there are lots of reasons why politics can interfere with otherwise efficient processes of globalization. And we certainly have seen some of that through the pandemic with all of the quarantines, the shutdowns, and the challenges with supply chain. But let's also keep in mind that some of the inshoring and friendshoring that is shifting globalization patterns is not driven by politics, it's driven by markets. So if Chinese labor costs go up and become globally competitive, then there's less reason to offshore all of your labor to China. Also, to the extent that we have new technologies like robotics and deep learning with AI that displace labor, then there's not as much reason to have factories that are producing for the whole world based in China. You want to have your factories where the consumption is. So for Chinese consumption, you want factories in China. For Indian consumption, you want factories in India. And for American consumption, you want factories in America. And I would say that those latter drivers are actually market positive, even though they are moving away from globalization.
Ian, you know, quick take as far as where things currently stand on the Russia-Ukraine war, now entering year 2, no sign of de-escalation. What do you see as the next triggers on this front?
Well, there is only signs of escalation. I don't have a crystal ball as to what's going to happen on the ground in Ukraine. The Russians are going to try a significant additional offensive with these new 300,000 troops that they've raised over the past months. We'll see how they perform. And of course, the Ukrainians, that's why there is such existential urgency from them to get tanks, and once they get tanks, to secure fighter jets, and once they secure fighter jets, to get as much support as humanly possible from NATO. Look, the Ukrainians can lose this war. Zelensky knows it. He knows that time is not in his favor because Russia has a much bigger economy. Russia has a much bigger military, and Russia's economy last year only contracted 3.5–4%. Ukraine's economy contracted 40%. So he's feeling that urgency. But even if the Russians are able to hold territory and quote-unquote win in Ukraine, Russia will lose on the global stage. NATO will be expanded. Russia will be treated as a rogue state by all the wealthy democracies in the world. Their assets will continue to be frozen, their central bank assets. They will no longer do significant business with Europe. And all of that is a feeling of humiliation for a Russia in decline, for a Putin in decline. And that, of course, means that the danger that Russia poses to the rest of the world as the most powerful rogue state that we've ever experienced in our lives, that's something that has to be the top of everyone's geopolitical concerns right now.
Ian, very quickly, we are, of course, in the middle of an era of a poly-crisis. I mean, there's pressure points in different economies, in different aspects. What are you most concerned about today?
I am most concerned about Russia, and nothing else is even close. We are talking about a country that has become a direct enemy with the United States and all of NATO. This is not just a Cold War. This is a hot war. It's a hot war being fought by proxy. But the fact is that the Ukrainians are being provided direct intelligence, training, and advanced weaponry by pretty much every NATO state. And Putin is going to end up in a vastly worse position than he was before he decided to invade on February 24th, the worst misjudgment of any major leader on the global stage since the wall came down in 1989. The geopolitical danger that represents cannot be overstated. There's a possibility of even weapons of mass destruction being used in the field, but well short of that, we're talking about the fact that this war will not be just contained to Ukraine. We will be talking about a war between Russia and NATO that will be fought in cyber. It will be fought through infrastructure. It will be fought through espionage. It will be fought through disinformation. That is an enormous challenge, the likes of which we have not seen since the Soviet Union collapsed.
Ian Bremmer, always a pleasure. Appreciate you joining us here on CNBC-TV18 with your take on some of the big challenges that the world faces in 2023. Appreciate your time. That's it then on this edition of Business 360. Don't go anywhere. We're back in a minute with a lot more. Stay tuned.